Hi, everyone. Thank you so much for joining us today. My name is Sokha Yous. I'm a financial wellness counselor here at Mayo Employees Federal Credit Union. Today, we're going to talk about student loans and repayment. We're going to have some frequently asked questions and answers at the end of the presentation. But if you have any questions during the presentation or at the end or even after the presentation, please feel free to reach out to me. We can touch base on that. But if you have questions online, just type it in. Darian's going to ask me. But if you have a question here in the audience, or if you can just interrupt me and then we can address it. So what's on the agenda today? We're going to talk about paying for college, federal student loan, federal student aid, FAFSA, when and how and where to apply for that. Identify your loans, understanding repayment options, preparing for repayments, which started back in October, but if you haven't started yet, we'll talk about how to prepare for repayments moving forward. And then we'll talk about some frequently asked questions. So paying for college, of course, there's college savings plans. We have that here available at Mayo Employees Federal Credit Union, but you can get that anywhere else too. So for example, that's a 529B plan. You can start that, early on, or whenever your child is born, or for whoever that you're getting it for, or you can just have a regular separate college savings plan altogether in a separate savings account. You can get student loans. You can either get private or federal student loans, or you can have get scholarships. So there's scholarships at Mayo and also scholarships here available that we usually give out at the end of September at MEFCU here as well. So something to look into. So there's lots of grants and stuff to look into as well. I'm sure the high school counselors and online research can tell you exactly where to go to apply for certain grants, apply for certain scholarships too. So federal student aid, otherwise known as FAFSA, before each year of college, students can apply for federal grants, work study, and loans with a free application for federal student aid form. Your college uses your FAFSA data to determine your federal aid eligibility. So who qualifies for FAFSA? So quite a few. The eligibility list is on studentaid.gov, which I'll go ahead and give that here in a little bit too. But some of the basic eligibility requirements is that you must demonstrate financial need-based federal student aid programs. If you can be a U.S. citizen or an eligible non-citizen, which means if you have a green card. If you have a valid Social Security number, with the exception of students from the Republic of Marshall Islands, Federated States of Micronesia, and the Republic of Palau. You have to be enrolled or accepted for enrollment as a regular student in an eligible degree or certificate program, maintain satisfactory academic progress in college or career school, provide consent approval to have your federal tax information transferred to your FAFSA form just to verify your income. You have to sign a certification. You have to show that you're qualified to obtain a college or career school education. So if you have any more questions about if you qualify or not, you can go to studentaid.gov. That can walk you through it. And there's also FAFSA counselors that you can talk to as well. So when is the best time to sign up for it? So applications open from October 1st and closes on June 30th. So the sooner you apply for it, the better, because it typically works as first come, first served. So the sooner the better. So October 1st before the start of the following school year. So for example, if you're starting college or is looking to begin university, wherever it is you decide to go, for 2025, you might want to go and apply by October 1st of 2024. How do you apply for it? You would just get on studentaid.gov, or you can just type in FAFSA, F-A-F-S-A, on studentaid.gov, and they can take you right to the application. Next, we'll talk about how to successfully repay your student loans. So first things first, we want you to learn how to identify your loans, prepare for repayments, understand repayment options, and learn more about the Public Service Loan Forgiveness Program that's available at Mayo Clinic as well. So how to identify your loans. So a lot of times you can go to studentaid.gov, just take a look at your loans. They'll go ahead and transfer you or send you over to your student aid servicing company. So it can be Mohila, it can be a few other different student loan servicing companies out there. So first figure out where it's at for you. But if you can't log on to studentaid.gov, then you can go to your credit report. You can go to annualcreditreport.com. And on there, it should show all your student loans, everything that you owe on there, and your student loans will be on there too. And it'll tell you who your student loan service provider is. And of course, they'll provide phone number on there too. So again, go to studentaid.gov or go to annualcreditreport.com for that information. And next, we want to talk about the student aid website. So what type of loans do you have? Is it subsidized loans, unsubsidized loans, or is it private loans? So you can look into that as well. So they'll tell you, when you reach out to your student loan servicer, they'll tell you if you have it's subsidized, unsubsidized, or if it's private student loans, and because it follows different, have different, ways to pay it back, or different modifications, or excuse me, not modifications, but different modeling on how you can qualify to get those loans. Are your loans public service loan forgiveness eligible? You can go to studentaid.gov for that too, and go to forgiveness and cancellation and see if you're eligible for it. So some of the eligibilities, we'll talk a little bit further more into the slides, is you have to work at least 30 hours per week to be qualified for the PSLF program. And then you just have to, apply and certify each year, which Mayo Clinic is known as is a nonprofit, so they qualify for the PSLF program. So look a little bit further into that too if you think that you qualify for that. So for subsidized loans, is for the Education Department pays interest only. The department pays interest only when you are enrolled. So what does that look like? If you get a loan for, let's say, 3 loans of $3,980, and the principal amount is $3,977, the interest won't accrue for you because the department pays for you while you are enrolled in school, and then you have to repay it back about after the grace period. And the grace period after graduation or after enrollment is 6 months. So that's when you have to start paying it back, when you're no longer enrolled or once you graduated. So that's a good thing about having the subsidized. But the unsubsidized is for undergraduate and graduate or professional degrees that have available higher loan amounts. So this is what it would look like for you, what the remaining balance would be while you're enrolled. So when you're paying back, understanding the repayment options that you have for your student loans, the standard repayment time frame is 10 years. So preferably, they want you to pay off all your student loans within 10 years. So if you don't think you can pay the amount that they're requesting to have it paid off within 10 years, you can apply for different repayment programs. They have the graduated programs, which increases your payment over time. So you can start out smaller, and it gradually increases your payment as your income increases as well. Or the extended repayments is repaid over the next 25 years. Some people some people qualify for that, but in order for you to get on the graduated or the extended repayment program, you have to, of course, talk to your student loan servicer and see if you qualify for that. So there's income-based. So incomes are calculated based on income and family size. So the different income-based repayment programs are pay as you earn, revised pay as you earn, income-based, income contingent, and a few others. So if you talk to your student loan servicer and you'd let them know that, hey, listen, I'm having a hard time repaying this back. I cannot afford $500 or $600 a month repayments. So what kind of program would I qualify for? But also do your own research too, to see which one you qualify for. If you have more questions about it, of course, reach out to your student loan servicer and see what is the best, repayment program for you. So for private student loans that's not government funded, lenders' policies and regulations, so you have to follow their policies and regulations. If you cannot, pay back your private student loans, just let them know. Reach out to the creditor as well and let them know that, $500-$600 a month is a little too much for me. Is there any way that I can do a deferment? Is there something that I can do to lower my monthly payments? Sometimes they'll have you reconsolidate your loans to see if you can qualify for a lower interest rate. Or if you have a co-signer and you want to drop them off of your loan, then that's the best option for you, is to go ahead and reconsolidate or refinance your loan to see if you can qualify for a much lower interest rate, or if you need to drop your co-signer too. But if your credit's not good enough, you may need a co-signer also. So your co-signer may be required to get a lower interest rate, or co-signer release after meeting requirements too. So some of the payment examples that we're looking at, wondering what the different loan amounts and repayment types will look like for you. So the typical student loan amounts that people are coming out with an undergraduate degree is typically around $37,000. The standard repayments, so the monthly payment will be $394, but the total interest paid is $10,000. So remember, the standard repayment is 10 years. The graduated standard repayment, where it gradually increased your payments throughout your payments, the lifetime of the payment of the loan, it's lower each month, but your interest is going to be a little bit more than 10,000, so it varies depending on how much they increase your monthly payments. The extended repayment program is $216 per month, but remember that takes you 25 years to pay it off. So if you're paying $216 a month for a total of, on a $37,000 loan, your interest paid extra on top of that $37,000 is $28,000. So just keep in mind that just because your payments are lower now, that doesn't mean that you're not paying a lesser amount. You're actually paying a lot more. The repay program is $350 per month. Total interest paid is $12,000. And the MEFQ consolidation loans, for example, our loans, with our interest rate, the average interest rate right now, you would pay roughly around $303 with a total interest paid of $17,418. So this is over, the standard repayment program is over 120 payments, so that's 10 years. The graduate standard repayments, it usually typically increases 20% every 2 years. The extended repayments is, the 25 years, so that's 300 payments. The repay program is 11.5 years. And our consolidation with May Employee Federal Credit Union is typically 15 years, so that's 180 payments. So if you're thinking about consolidating your loans, you can do that, with federal student loans as well. We'll talk a little bit more about that, but this just kind of gives you an example what your payments might look like at $37,000 student loans. So if you're coming out with $50,000 in student loans, this is what it will look like. For example, the $530 for standard repayment over 10 years. If we look at the extended one, you're looking at paying $37,700 in interest over 25 years. And then with MEFQ, you're looking at $409 per month for the next 15 years, paying an interest total of $23,538. So something to really look into. So yes, student loans, you may need something like that right now, but just think about how are you going to pay this back? Are you getting a degree? Are you going into a profession that you're going to be able to afford your student loans? And it's kind of easy for a lot of people to get student loans too. So just remember when you're signing on the dotted line or when you're doing the electronic signing, you have to think about what your life might look like in about 5 to 10 years, So, and let's say in 4 years, once you graduate your undergrad, or if you're going for your graduate degree or your medical degree, what is that going to look like for you once you have to start paying it back? Are you going to have the income to support that? Are you going to be able to commit the next 10 or 25 years to paying back your student loans at that amount? How would that affect you as far as savings with your life goals? When do you want to start a family, if that is something you want? When do you want to buy a house? All of that affects your life, especially with student loans. As we know, it's the popular topic these days about people not able to afford their student loans. So just think about, is that degree that you're going for, is that something you're able to afford to pay is that going to afford you the life that you want and also afford your student loan repayments? Or are you going to have to work 2-3 jobs the next 10 years to pay off your student loan debt? So something to really consider and think about. And then, so we'll look into federal consolidation. So you can consolidate all your federal student loans, all your subsidized loans into one loan. So typically when you get student loans, it's multiple loans, but you're making one payment. So you can consolidate all your subsidized student loans into one loan. That way you're getting only one interest rate and one payment towards that subsidized loan. And then you can consolidate all your unsubsidized loans together as well. So that way you have, one low interest rate and one payment towards that loan. With private loan consolidations, you consolidate both federal and private loans into one loan. Repayment terms are typically 5, 10, or 15 years. And consider multiple options in terms. Okay, so remember if your interest rate isn't that good, you may need a cosigner, or if your parents were your cosigner when they got your private student loans and they're itching to get off, the loan documents, you can refinance your loans and so that way your cosigner can get off the loan as well. But just remember that when you consolidate your federal student loans into private student loans, you can't go the other way around. So then you'll be losing your federal benefits as well. So for example, there's another pause on the SAVE program right now with student loans right now too. So if you had private student loans, that wouldn't apply to you, so you're losing some of that benefits as well. And the pros of having private consolidation, you make fewer, you have, fewer loans to manage, you save money with lower interest rate, you improve cash flow with lower payments, and you release the cosigner a lot sooner. The cons of consolidation, you forfeit benefits provided by federal student loans, so just be very mindful of that. So what do you do when you can't afford your student loans? Even though there's not a forbearance, active forbearance right now, you can still reach out to your student loan servicer and say, do you know what, I'm having a financial hardship. There's no way that I can make my payments and also put food on the table for my family and I. What is your option? And they can still offer you to do a forbearance. It can be a month-to-month forbearance. It can be, a 6-month forbearance, a 1-year forbearance. Whatever the situation is, just let them know ahead of time before you default on your student loans. You can also make changes in expenses or lifestyle to better afford your student loan repayments. It's not out of the ordinary to hear people work 2-3 jobs these days to try to pay their student loans. It's not ideal, right? So when you are getting your student loans at 18, 19, you're not thinking about, my gosh, at 28, 30 years old, I have to, DoorDash after my 9 to 5 just so I can afford to pay the rest of my student loans off on time, and then try to afford daycare too, or maybe save for a wedding or save for a mortgage too. So it's really, it's such a large, payments that's affecting a lot of American households. So I really, really encourage people before taking out student loans, really encourage, yourself to envision what your life will be like with student loans of that size, and then with it without, how much further would you be with your financial goals if you didn't have your student loans paid for. So consider other options too. So the pandemic forbearance, as we're aware of, so it took effect it became effective in March 2020 as part of the CARES Act. The executive order came from President Trump and then President Biden, and the repayment began in October 2023. So preparing for repayments back then, it's really important that you know who your student loan servicers are currently, because they went through a whole change where they sold it to, or they moved it over to a different student loan servicing company. Your student loan servicing company might not be in existence anymore from 2020 to 2024 or 2023. So it's really important that you monitor your account closely by, again, going on to student.gov or going to annualcreditreport.com. So we're going to cover some of the frequently asked questions. So some of them would be, should I consolidate or refinance my student loans? Well, consolidation may not be the right choice for all borrowers. It depends on the current rates and type of loans, whether it's federal loans or private student loans, and the cosigner release. If you had a cosigner when you were getting private student loans at 18, 19, and your cosigner is not in a hurry to get off of that lease, and they said, we don't mind staying on, having our name on as a cosigner. Since you're making your monthly payments on time, it's not really having a negative impact on the cosigner's credit or anything, then don't be in a hurry to reconsolidate. Unless you have a very high interest rate, then you can consolidate your loans and try to get a lower interest rate too. Or if you just want to consolidate your federal student loans or private student loans because you have better rates, then by all means do so if you have a better, much better plan to pay it off that way. What is the best way to pay off student loans faster? There's no prepayment penalties, so you can pay it off a lot sooner. So they can be paid off anytime. Refinancing your student loans can lower your interest rate. So once your interest rate is lower, that means that you're saving more money at the end of each month. With that extra money, you can put it towards the principal of your student loans as well. So I highly encourage, if you have good credit, or if you know someone with good credit, they can help co-sign you, get you consolidate your loans to get a lower interest rate and then pay it off sooner that way, or get a second job to pay it off sooner too. What if I can't afford my payments? Well, you can enroll in the income-driven repayment program with the SAVE program that was open, or get a second job, or try to, again, consolidate your loans to see if you can get a lower interest rate. It's go back, live with your parents for a while and see if you can find ways to save money that way. A lot of people are doing that too. There's no shame in that. I'd rather have people reach their financial goals versus having the ego stand in the way of, living with their parents. So there's no, I highly encourage people to have an emergency savings and pay your debt, pay your bills on time, and also pay your debt off as quickly as possible. Whether that means moving to a smaller apartment or renting extra rooms in your house, or, moving back with family. There's nothing wrong with that at all. How long does it take to pay off student loans? Well, the standard repayments is 10 years, as we reviewed. The extended is 25 years. So preferably the sooner you pay it off, the more money you'll save in interest. So the sooner the better. Can I deduct student loan interest for your taxes? Yes, you can qualify to deduct up to $2,500 of student loan interest per year on your income tax return. You can claim the student loan interest tax deduction as an adjustment to your income. You do not need to itemize deduction to claim it. So that's something your student loans will send you before you file your taxes too. So keep an eye out for that, and then you can use that as part of your deduction as well. So they'll tell you exactly how much interest you paid that year. How do I remove student loans cosigner? You can refinance or consolidate your loan. That's pretty much the only way to remove your cosigner off of your current loan. Do student loans affect my credit score? It does. If your student loan amount to payment history will go on your credit report, that means that if you're delinquent in your payments, then it'll show up as delinquent and it has a negative impact on your credit score. So if you don't pay it on time, that's how it will affect that. Can a creditor ask about the alimony, child support, or separate maintenance payments that I or my cosigner receive? A creditor may ask whether income stated in your application comes from alimony, whether it comes from child support or separate maintenance payments. However, the creditor must tell you that you do not have to reveal those income if you don't want it to be considered. Where do I go to find out who is now handling my student loans? Millions of federal student loan borrowers will have different service provider when payments started in October. If you are impacted, you should have received an email or a letter. So go to cernae.gov or annual credit report, and they'll have that information on there. That's why it's also really important to keep your information updated. Make sure your address is updated on your credit report. Make sure your phone number, your email address is correct on there too, just so they can send you all correct information about your student loans and your other debt too. Is there a new repayment option? Yes, the federal student loan borrowers can now sign up for the Biden. Well, it was open, but back in October. And there's a pause on it now, so we don't know when that pause is going to be lifted. So there's always, new information coming out every week about the student loan. So we'll keep an eye out for that information and see when it's going to, when that pause is going to be lifted. What is the SAVE program? So it's important that you understand what that is too. This plan is formerly called the Revised Pay As You Go. So it's a repayment plan. Borrower will pay just 5% of their discretionary income under the SAVE program versus 10% of discretionary income under the Repay program. So that 5% does make a big difference. But also go on to cernae.gov. They'll go into more details about that information. So it's really, really important that you understand it and see if it's something that you want to qualify or you want to sign up for. And some people have questions about discretionary income. What is it? It's extra income that you have after paying your basic necessities like taxes, everyday expenses, and household bills. The SAVE plan increased the income exemption from 150% to 225% of the poverty line. That means more people qualify for this program. So it's really important that you understand what the poverty guidelines are for 2024, 2025 in your state or even in your county. What happens to your interest? So on the SAVE plan, the SAVE plan eliminates 100% of the remaining interest for both subsidized and unsubsidized loans after a scheduled payment is made. If I'm married, can I apply for the SAVE plan? Yes, you can, and you don't have to use your spouse information on there either. When can I apply for the SAVE plan? That was available on cernae.gov. It was open to the public in September of last year. So go to cernae.gov to see if you're still qualified for that. What if I'm already on the income-driven repayment plan? You can log onto cernae.gov and go to the My Aid page to view your loans. Each loan will have a list of repayment plan. If you're already on the Repay plan, you will be automatically enrolled into the SAVE plan, so you don't have to do anything else with that. Which loans are eligible for the SAVE plan and which aren't? So eligible loans include direct subsidized, direct unsubsidized, direct plus loans made to graduate or professional students, direct consolidation loans. Ineligible loans include direct plus loans made to parents. I've been meeting with a lot of older members that are repaying back their child's student loans. You know, you got student loans for your kids, they're still now, you know, not able to find a job to where the point where they're not able to pay back their student loans. So a lot of times they're talking about retirement in about 4 or 5 years, but they still have this $20,000-$30,000 student loans. What do they do with that? Is that something that they can, you know, just be released from the loans? What is the process of getting released from the loans? Again, your child would have to consolidate their student loans so that way they can take your name off the loans. So that's kind of the new norm these days too, with, you know, with parents that are looking at retirement, but also still have a lot of student loans left over. Which loans are eligible for the SAVE program, which aren't? So they're listed here. The loan types below may be eligible, but they must first be consolidated into a direct consolidation loan too. Again, go to student.gov. They'll go into details with you about how to apply for that program and what is eligible for it. So this is an example of what that SAVE program will do for you, how much you might save each month. What are the SAVE plan benefits go into effect this year? So the SAVE program has additional benefits that will go into effect. So for example, payments for undergraduate will be cut in half, reduced from, you know, from 10 to 5% of income above 225% of the poverty line. Borrowers with undergraduate and graduate loans will pay a weighted average of 5% and 10% of their income based on original principal balance. The borrowers with original principal balance of $12,000 or less will receive forgiveness, or that took place late last year or earlier this year. So just keep an eye out for that. I think there's supposed to be another wave of forgiveness. I know that, you know, some federal courts have a pause on that right now, so just keep an eye on the news about that too. So I think there should be another wave before, or something's going to happen before the election. So we'll just have to keep an eye out for that. What if my loans are in default? If your loans are in default, you may qualify for the Fresh Start Initiative to easily get your loans back in good standing. It's free, and it takes, you know, just a few minutes to sign up for it. So again, student.gov should have all that information. What happens if I apply for income-driven repayment after my servicer has already generated my first bill? Your servicer will then place you on a forbearance status of the upcoming billing cycle. So that can be any time. So once they've already, you know, started a bill for you, like they send out your bill to you and you said that I can't make this payment, you can still reach out to them, let them know of your financial situation. They can still put you in forbearance. Can I qualify for both the PSLF and the SAVE program? You sure can. You just have to apply for both and then recertify each year. Now my scheduled payments under the saved income-driven repayment plan is $0. Will that count towards the PSLF if I am also employed full-time by a qualifying employer during that month? Yes. So for example, during the pandemic, when there was the 3-year forbearance, and you didn't have anything due for 3 years, you know, that still counts towards your PSLF, because you have to be on a repayment plan, 120 repayment plans to have your public service loan forgiveness loans forgiven. So all those years and all those months of zero payments is still being counted towards your PSLF repayment, the eligibility as well. So again, if you have any questions, you can go to our website here, but I highly encourage people to go to student.gov as well. There's a lot of new information on there, and they update their information, I believe, weekly when it comes to the SAVE program, or as new information comes. So do we have any questions online or in the audience at this time? No? Okay, perfect. If you have any questions, this is my contact information. Again, my name is Sokha Yous. I'm a financial wellness counselor here. So, all right. Well,